Debit and Credit Online Classroom welcomes you to the second part of cash flow statement, that is cash flow from operating activities. In this video, I have given importance for determination of net profit before tax and extraordinary items. This is because I have seen that many of the students were going wrong in this part, that is calculation of net profit before tax and extraordinary items. So I think by explaining this part nicely, you can understand and it will be easy for you to appear for examination. And now the sample papers of CBSE board exam has come, and to see that cash flow statement carries 8 marks, and out of that 6 marks is for cash flow statement preparation. Usually importance used to be given for the operating activities. Let us start. Operating activities are the principal revenue producing activities of the enterprise and other activities that are not investing or financing activities. So the operating activities are the principal revenue producing activities. In the case of manufacturing firms, the manufacturing of the goods and its selling as the revenue producing activity. Then in the case of some retail shops, buying of goods and selling of that goods as the revenue producing activities. In the case of financial institutions, then receiving of the deposits and giving the loans are their principal revenue producing activities. So the operating activities are the principal revenue producing activities of the enterprise, and activities that are not investing or financing activities. Cash flow from operating activities may be calculated by using either direct method or indirect method. You can calculate then using two methods, that is direct and indirect. In this video, I am discussing about the indirect method because the plus 2 students of CBSE as well as the FA students of state syllabus also need this. In this, 5 steps are used to calculate the cash flow from operating activities. First of all, determine the net profit before tax and extraordinary items. Then determine operating profit before working capital changes. Calculate cash generated from operations, that is from the operating activities. Calculate cash flow from operating activities before extraordinary items. Calculate cash flow from or used in operating activities. These 5 steps are used to find out or to calculate the cash flow from operating activities. Now in this video, I am giving more importance for determination of net profit before tax and extraordinary items. This is because I have seen many students going wrong in this calculation. That also we can do in 2 ways, that is from the details given in the problem we have to do. So in some problems they will be giving the profit as per statement of profit and loss. If it is like that, profit after tax made during, that is it will be given in the problem itself, that is we'll get that amount from the profit and loss statement. That is the profit or the net profit will be the profit after tax. To that we have to add provision for income tax made during the year. All the provisions are just a book adjustment, no cash outflow is there, so that has to be added back. Extraordinary items debited as expense to statement of profit and loss also is to be added, because it is an extraordinary item, that is an expense which will not occur regularly. From that, we have to less refund of income tax credited as income to statement of profit and loss, and then less extraordinary items credited as income to the statement of profit and loss. Then we'll get the net profit before tax and extraordinary item. If starting point is surplus, that is balance in statement of profit and loss. In this case, in the problem, it will be given the opening and closing balances of surplus. That is balance in statement of profit and loss. First of all, we have to find the difference between the closing balance and the opening balance of surplus. To that, we have to add the dividend paid during the year, interim dividend paid, transfer to reserves, provision for tax made during the year, extraordinary items debited as expense to statement of profit and loss. From that, we have to less refund of income tax credited as income to statement of profit and loss, extraordinary items credited as income to statement of profit and loss. Then we will get the net profit before tax and extraordinary items. This statement you have to keep in mind while calculating the net profit before tax and extraordinary items. Now let us see why we were adding some items and why we were deducting some. The treatment of these items. First, we are going to discuss about the treatment of dividend. Dividend proposed by directors is shown in the notes to accounts as contingent liability, that is not provided in the books of accounts. So we are showing it as a contingent liability in the notes to accounts. It is accounted in the books after it is declared by the shareholders at the annual general body meeting held in the next financial year. The procedure is, in the directors meeting, the dividend will be proposed to pay, and this is to be kept in the general body meeting, which will be held only in the next financial year, and from there it has to be declared. Then only the firm can pay it. So the payment of the proposed dividend will occur only in the next financial year. As a result, proposed dividend of the previous year is shown as appropriation, that is deduction from surplus, and the amount of dividend paid during the year is added to determine the net profit before tax and extraordinary items, because it is an outflow of cash to be shown under financing activity. This dividend is a return on shares. So this share is if share capital comes under the financing activity, and so the dividend paid will be shown in financing activity. That's why we are adding it back to net profit to find the net profit before tax and extraordinary item. Effect on cash flow statement. Proposed dividend for the previous year is shown as outflow of cash, assuming that the shareholders have approved the proposed dividend as was recommended. No effect is given to the proposed dividend of the current year. Proposed dividend for the previous year is shown as outflow of cash, assuming that shareholders have approved the proposed dividend. And no effect is given to the proposed dividend of the current year, as it is not provided. As already said, the proposed dividend of the last year will be paid in this year, and this year's proposed dividend will be paid only in the next year. That's why we are not giving any effect of the proposed dividend of the current year. And treatment of provision for tax. Provision for, first of all, we should understand that all the provisions are only book adjustments. No inflow or outflows happen there. So here the provision for tax is added to net profit because it is not a payment, that is, there is no outflow of cash. Tax paid is deducted from cash generated from operations to determine the cash flow from operating activities. If it is paid, we can deduct. If it is just a provision, it has to be added because in the profit and loss statement it is already deducted. In case opening and closing balances of provision for tax are given, provision for tax of the current year is added to determine the net profit before tax and extraordinary items, and provision for tax of the previous year is deducted, taking it as paid in current year. In case tax provided during the year is given, provision for tax account should be prepared. Tax on income and refund of tax. Income tax paid is shown as an operating activity separately. If the tax paid is related to investing activity or financing activity, it is shown under respective activities. If the income tax paid is on regarding the operating activity, it will be shown in the operating activity, and if it is with regard to the investing or financing activity, it will be under the respective as. Reserves are created from the surplus, that is the balance in statement of profit and loss. The transfer from surplus, that is balance in statement of profit and loss, to other reserves is added to net profit because it is an appropriation of net profit for the year. When we transferred the amount to the reserves, it had decreased our net profit, although it was an appropriation, so that we have to add back. Increase in general reserve is added to net profit for the year to determine net profit before tax and extraordinary items because it is appropriated out of surplus, that is balance in statement of profit and loss. Increase in general reserve, that is the increase, the difference that is between the opening and the closing balance, that increase is also made by the appropriation out of the surplus, so that also has to be added back. Extraordinary items. Extraordinary items are the items which never occurs regularly, like loss due to fire, loss due to earthquake, like that. Extraordinary income as a claim from the damage occurred due to earthquake or fire, like that. That also are not of recurring nature. So these are the extraordinary items. Extraordinary items shown as expenses are added to net profit because when we showed it as expense, our net profit had decreased. Now we have to add it back. If it is an income, then we have to deduct it. But towards the end, it is deducted to compute the cash flow from operating activity. To find the net profit before tax and extraordinary items, we have to add it back. But when we prepare the cash flow, at the end of that, we have to deduct it, and if it is related to operating activity. Now, from the following information, calculate net profit before tax and extraordinary items. If we do the problem, we can understand more easily. Surplus, that is balance in statement of profit and loss, 50,000. That is opening balance, and closing balance is 1,18,000. Dividend paid, this proposed dividend for the previous year is 36,000. Interim dividend paid during the year is 45,000. Transfer to reserve is 50,000. Provision for tax made during the current year is 75,000. Refund of tax is 1,500. Loss of inventory due to fire is 1 lakh. And insurance claim received for above loss as 50,000. Let us see how we can do this, how we can find out the net profit before tax and extraordinary from these items. Let us start. First of all, we have to find out the profit for the year. How can we find it out? We have to deduct the opening balance of surplus from the closing balance. The opening balance was 50,000 and the closing balance was 1,18,000. So 1,18,000 minus 50,000 gives 68,000. Then to that we have to add the dividend paid during the year, 36,000. Interim dividend paid during the year, 45,000. Transfer to reserves, 50,000. And provision for tax made during the current year, 75,000. We'll get 2,74,000. Then we have to deduct refund of tax. That's 1,500 because this tax pertains to the last year. Extraordinary items debited as expense has to be added. That is 1 lakh. Then as income we have to deduct that 50,000. Then we'll get net profit before tax and extraordinary items as 3,22,500. I believe that you have understood to calculate the net profit before tax and extraordinary items. The CBSE students have to be very careful in learning this because it is a sure question for you, 6 mark sure question for you, and the college students will also get a question on cash flow statement. Thank you for supporting me, and next video will be on preparation of cash flow from operating activity, and I'll be coming with another video on the important tips to attempt the accountancy examination 2023. Thank you very much. If you have not subscribed my channel, please subscribe. Thank you.